Good morning, traders. Richard here doing quick Ichimoku cloud chart market review of the Nasdaq E-minis futures contract, Nasdaq 100 E-minis. Right, we've got a 20% correction on our hands. We were worried about that in the last update. We were roughly around about here when we were looking at this resistance holding up here at the moving averages. Then we highlighted the downside target is the next moving average here, as well as slicing through, and then we had this 19,524 to look at for downside support. That failed. The next downside target was 19,038. That briefly held, but then we sliced through that pretty quickly with the tariff tantrum. And then we highlighted these downsides, the August lows here, as the next downside targets. And we got there pretty quickly in a session of 2 days. And then the market seems to want to rebound from the 17,820 downside target. We can see this cluster of support here at the top end of the cloud back to February 2024. The other thing to watch out for is we're not quite there yet, but we look like we want to complete a downward continuation pattern. One move down, pull back, one move down. And normally these pullbacks are almost symmetrical. So for this one to complete, we roughly need to be down here at the 17,500 zone, basically. That's kind of where this pattern would complete. So there's still some downside risk to 17,496, 17,133, and the bottom end of this cloud chart zone here at 17,016. So that's the picture on the daily Ichimoku. Now we had a couple of sell signals at the top in the chart here, as well as when it sliced through the cloud chart support zone there, that turned the Nasdaq futures into bearish territory. So all of this is just bearish price action. For it to be back in bullish zone, we need to trade back above the top end of the cloud. So the only thing we could really do is short the rallies and swing trade the support, short the rallies and swing trade the support. Now the question is support going to come back in after this 20% correction and support the market? Yeah. So let's go and take a look at the weekly Ichimoku, see if there's any indication where this rally might stop. Let me take a cleaner chart than this one. Hold on. So looking at the weekly, we were last updating, looking at the support here at the top end of the cloud. It did rebound a little bit, then sliced through, dug deep into the cloud. Then we were looking at this downside target, these lows here, and by the time we sliced through that zone, then we were looking at the bottom end of the cloud there, really broke through that major support zone. So that is quite significant. So now the weekly chart is in bearish territory long term, and so there's still more downside to come. We can possibly see short-term relief rallies back up to the bottom end of the cloud, even to that zone there in the top end of the front end of the cloud, if support comes back into the market here. If support fails in and around these levels, then we're looking at this cloud chart level as the next downside target, and this top end of the cloud as the next downside target there. But so far it's looking like it wants to rebound from this April 2024 low, and then the December-January lows here also coming in as potential support zones. So that's all going to depend on how the tariff story is going to play itself out going forward. Now if we look at the monthly Ichimoku, you can see the beautiful double top there. The candles gave us an idea that the market's a little bit extended there and pulling back, and we're also looking at the price action between the top end of the cloud and where the price closes were at that point in time. So that gave us the idea that the risk in the market, the pullback in the market, was quite high. Now if we look at this move, let's just do a Fibonacci study on that one, retracement. So from this low there, that move there to that high there, did replace 61%, so that's quite significant actually. But if we go back and we pull that line to this zone where that rally started, we can see still once again 50% there. Now if we're going to put this on top of this most recent rally, and we move that one to the bottom of this, when this rally started, you can see there we are busy with what, 50% retracement, pretty much sliced through the 23 and 38% and 50% retracement pretty quickly. Now note, the interesting bit here is note that this is the standard line of the Ichimoku cloud. That's a major support zone there. That failed. Now will be critical to come back at that zone. Also keep an eye on the front end of the cloud here for major support. This 18,118 and 17,582. That is another cluster of potential support for the market. So what we could see is a bit of a sell-off now, and then a brief little pullback, and then another continuation down to the top end of the cloud. Yeah, because a lot of the previous corrections on the monthly basis did get back to the top end of the cloud. Yeah, if we look at this rally there. So from a monthly cloud chart perspective, keep an eye on this front end cloud chart for possible support, as well as the standard line of the Ichimoku cloud there, and these old highs there as the potential for support zone. So if these three fail, then we there's further downside in the market to the top end of the cloud there. So keep those levels, keep an eye on those levels on the monthly Ichimoku. On the weekly, we now know that it looks like we've got a bit of a support coming back in at this cluster of support between this low here, the other lows, and this top end cloud chart, as well as this bottom end cloud chart support zone. But do realize we're now in bearish territory. Price action below the cloud is bearish on a weekly Ichimoku, so keep an eye on that. Any kind of potential relief rally from here will probably be met with resistance at the bottom end of the cloud here, so keep an eye on these levels as well. Let's take a look on the daily again. You can see the length of the candle gives us a little bit more comfort that we might be heading for a bit of a relief rally there, but we now have completed that 20% plus correction in the Nasdaq futures. Now, if you want to trade much short term, look at the 4-hour Ichimoku cloud. You can see that we had a lovely sell signal there, short signal there, another one there. And now you can see how the support here is coming back into the 4-hour Ichimoku, but there's still some significant downside risk on this Ichimoku cloud. Just go back to the original one we had in here. This hold on. So keep an eye on this support zone, this cluster of support between the old lows and then this critical cloud chart support zone. If this rebound rally from that zone holds, then we should see it heading back to the bottom end of the cloud, next resistance zone there, as well as 19038. But we're not out the woods yet. I do want to say that we are still in bearish territory on the weekly Nasdaq E-mini futures contract. Until next time, keep an eye on those support zones on the monthly Ichimoku as well as these on the weekly. Until next time, happy cloud chart trading. Bye for now.